Welcome to Investors Insights. Our topic today is stress test. As we start this week on July 3rd, I want to point out a couple of things. First of all, in 6 months from today, it will be January 3rd, 2024. Think about that. We've got a lot of information and economic data to share with you, stress test for this week. We also want to emphasize the importance of Tuesday with July 4th, in which we just want to recognize those men and women who have served this great country, to see to it that we could have independence and that the values that we have as a nation in honoring those who went before us for our freedoms and to be able to have our voice and state our opinions and share with each other and interact in freedom. We cannot thank you enough. On that note, our topic, stress test. And like any great nation, we've got things going on that we also want to keep an eye on in terms of the markets. And I'm joined today by my distinguished colleagues, Trey Booth and Ty Miller. And they've got data on stress test, some topics that you as clients have been asking us about as we've gone through this year. Trey, want to start off with you, please, sir, because student loan debt is something that has continued to be a topic with our clients. And I thought you gave a great summary of the impact of the decisions being made about student loan debt.
Yeah, absolutely. Thanks, Greg. So there has been a lot of news coverage of the Supreme Court decision to strike down the Biden administration's forgiving of student loan debt. But there hasn't been a lot of coverage of how that's going to positively impact what we think will be the biggest impact, inflation, and how that will be. So let's all look back to what causes inflation. This is a topic we've talked about a good bit while we're on this vlog, is that inflation occurs when demand is up here and supply is down here. And that mismatch of demand being greater than supply pushes prices higher, right? And so, but then also the secondary cause of inflation is the creation of more dollars through debt financing or pulling forward demand from the future by borrowing and spending today. The rejection of the student loan forgiveness actually hits inflation in both those spots. So let me explain how. Since 2020, the average student loan borrower hasn't had to pay $1 back in student loans. That's going to start in October. So the student loan borrower is going to owe $383 a month. So that reduces demand in a very high spendthrift part of the economy by $383 a month. So that's going to bring demand down. Then secondarily, by writing off this policy, it immediately eliminates projected $400 billion worth of additional debt. So part two, it reduces debt. So it brings demand down and reduces debt. Both those should hit inflation in the short term, starting in October. So some are watching closely. The positive impact could be a deflationary pressure, bringing prices down as spending is diverted from goods and services into these loan repayments. So it will be stressful on the borrower, but should also put pressure on prices, which should be of net benefit economic-wide.
I think that is a great explanation and just emphasizes even more so why student loan debt has been an issue. I know on an individual basis, those that have student loan debt have been really focused on it, but it's an economic impact or discussion that needs to take place. And you gave a great explanation on that. And it's one of those stress tests on us, and we'll be watching that closely.
Absolutely.
And then Ty, you did a phenomenal job talking about other types of stress tests, and especially one in regards to the banks. Clients have continued to ask us, how's our economy? Are we strong? Where's inflation? But one indicator we've watched is definitely the stress test on banks, and elaborate on that, please, sir.
We got some good headline numbers last week. We'll talk about, consumer sentiment and consumer confidence highest since like 2022, kind of the first half of 2022. So really good numbers there. Consumers are starting to get more confident, even with, student loan repayments coming. And then, of course, the Fed announced that last week, all 23 banks that they tested this year passed their stress test. Now, what does their stress test include? Well, it included a 10% unemployment rate. Currently, we're at 3 something, give or take.
Correct.
38% decline in home prices, which is a pretty steep decline, and a 4% drop in the value of commercial real estate. And so that's the scenario that they ran the stress test under for these 23 banks. They all passed. However, I would note that before Silicon Valley Bank collapsed, they passed a stress test as well. And it wasn't the Feds, but it was a stress test. And one thing that's kind of missing in their stress test is the liquidity crunch. And that's kind of what happened to Silicon Valley Bank. And that's something that, we still see coming up here with other banks. 23 banks, of course, don't, that's not the entire United States and not every bank. So there's a lot of regional banks that are left out there. And then with the Fed still having quantitative tightening, the Treasury, half of their issuance of new debt is going to be funded by bank reserves. And, we're seeing this liquidity crunch really come in, as you see in these charts of, the weekly change in bank reserves. They have fallen 130 billion in 2 weeks. And we expect a larger drain this week with QT, the Fed balance sheet runoff continuing. And so that's something that we need to keep an eye on, as the liquidity crunch. While it's great that they passed the stress test under these, scenarios here, we really want to see how they do with liquidity. And even as you can see in this chart, bank reserves and liquidity, very closely aligned and correlate pretty strongly. And so that's something we're going to keep an eye on going forward.
So folks, on that note, we just want to say to you, you've gotten some great information here today. We are cautiously optimistic about all that's going on in this country, in our markets, and in our economy. We're going to continue watching these stress tests and topics that we've talked about. And simultaneously, we hope that on this July 4th, that it's a great celebration for you, that you're around the grill with family and friends and having a good time. And regardless of how you spend the rest of this week, if you're on vacation, just know that here at Five Plan Partners, that we are honored to be working with each and every one of you. And that with that, we strive every day to see how we can make your lives better, richer, fuller. And in this great country and on this independence, also know that, yes, we're very thankful for freedom, and we're also very thankful for you. Have a great week. Talk soon.